Good evening, distinguished guests and dear panel. It is my great pleasure to moderate this last session before we call the end of a very fruitful day of our annual meeting. My name is Gregory Liu. I'm the Director General of Fund and Financial Institution Department, and I'm an honor to moderate this session. As you are all aware, global climate crisis is not just a theory. Now it's an acute risk we are taking. And how to mobilize private capital into climate finance and energy transition, it's a topic we need to study hard and work hard. Today with me, I have a very experienced panel. They come from both private sector background, also government background, policymaker, and multilateral investment finance institution. So I'd invite them to introduce themselves before we dive into the discussion today. Thank you. Lito.
Thank you very much, Greg. Just by way of quick introduction, I'm here officially as a member of the International Advisory Panel of the Asian Infrastructure Investment Bank, AIIB. But pertinent to this conversation that we're going to have shortly, I'm also here as a former Secretary of Finance and Secretary of Energy of the Philippine government. I was also a banker for most of my life. Today, I'm a retired banker, but still advising and sitting in boards of many companies, including the largest mining company in the Philippines that has decided to diversify and all their accumulated from funds from the high prices of commodities in the last few years is now going to be channeled to renewable energy. I'm also here as a senior advisor to TPG, the private equity firm that has created funds that are specific to climate. In fact, they just recently closed a fundraising that raised close to $1.5 billion on top of the $7 billion that they started with for a fund that they called TPG Rise Climate, which is really dedicated to ESG and green energy. So, thank you.
Good evening. My name is Chin Hua. I am the CEO of Keppel. Just a quick minute on myself. I started my career some decades ago with GIC, and then I went to work for Prudential. This is a US Pru, running one of their asset management businesses in Asia Pacific. And the last 20 years I've been with Keppel. So I kind of like to say that I started my life, my career, as an LP, then I became a GP, and then the last 10 years I've been an operator. I should have done it the other way around, but anyway, just a quick word on Keppel, because some of you may not be familiar with the name. Keppel comes from Singapore. We were part of what you would call a state-owned enterprise that was corporatized in 1968. Some years ago, Keppel would be known as what they call an industrial conglomerate. We are very well known for selling homes and selling oil rigs. At one time, we produced 40% of the new jackup rigs in the world. Today, Keppel is quite different. We are a global asset manager. We manage about 85 billion Singapore dollars of funds under management. But importantly, we have not forsaken our industrial roots. So we are also an operator. And this is actually one of the key differentiators that distinguish us from our global peers. For Keppel, we are providing solutions for a greener and more connected world. So we are providing solutions for our end customers to get to on their net zero journey. We're very involved in renewables, hydrogen, green ammonia, decarbonization, carbon capture, a whole slew of this. And be happy to share some of these on this panel. But at the same time, we think that as the world becomes more bifurcated, it's also very important to be connected. So we are building a subsea cable linking the United States to Singapore directly. And it lands in one of our data centers in Singapore. And you will go to an H data center and then 5G for last mile. So look forward to the conversation. Thank you.
If I may invite Chairman Ho.
Good evening. My name is Kyung-wook Ho from Korea. And unlike the two gentlemen who made it big in the private sector, my career is mostly in the public sector. Basically, I spent almost 36 years splitting my career, around half basically in the Ministry of Finance, all the way to the Vice Minister. And having gone through 2 rounds of a crisis, Asian financial crisis, as well as 2008 crisis. But also I spent the other half of my time in the international organization, World Bank, IMF, as well as OECD as an ambassador. So my contribution today will be mostly on the public sector government point of view. And right now I'm a senior advisor at the second largest law firm in Korea, as well as chairman of the board for Korea Center for International Finance, which is an institution trying to identify, hopefully, and avoid the next financial crisis. Thank you.
Dong, if I may.
Hello, good evening. My name is Don Lee. Chairman Ho just said 35 years, but I just started counting my cases. Gosh, I started 87, so almost 40 years now. Anyway, now I'm working as a senior advisor for Presidential Office in AIIB until a few months back. And I started my the AIIB career from the start, from AIIB started. So for last 8 years, I was Director General for Banking Department, which is a lot of private sector business, including fund equities and that. Yeah, before I joined AIIB, I was working for KIC. KIC is the Sovereign Investment Fund of Korea. In fact, I was a CIO before I joined here. And before the KIC, I was in the local private equity firm in Korea. And before that, I was Samsung Life Insurance as an investment side. And then before that, I was at IFC in Washington for about 10 years. So, kind of several career. So basically, my job is, advising and consulting, helping any issue related to, the private sector financing investment for the bank. So, again, thank you for joining, and I'm very grateful to be here. Thank you.
Thank you. Now we have heard a bit about each of you. I think it demonstrates collective knowledge beyond 150 years, if I may put in that way. Exactly. So for today's discussion, I think I want to put 3 topics on the table. The first one is, if I may ask you to put your hats on as an investor, thinking about the opportunities and the challenges on this climate-related finance and energy transition. Because in the past 4 decades, you have seen different type of investment from the sovereign fund angle, fund industry angle, and also the policymaker angle. So who would like to give a start on the economic opportunities and the challenges?
Okay. Well, I think on the investing side, right, the opportunity is tremendous, is huge, because the amount of capital that needs to be deployed in order to get to where we want to get to for climate action is a very big number. But I think that's the kind of the big picture. As we all know, the real difficulty as an investor is really looking at the details. Which are the deals that are actually investable? And this is where sometimes, at least up to this point, it's been very difficult because when you invest, and as a listed company, when we invest in renewables or we invest in climate action, I will always expect a question from the analyst. Does it make sense, right? And I think it's a fair question. So what we are seeing today, maybe specifically, is that at least in our part of the world, Singapore is probably one of the first countries in this part of the world, in Southeast Asia, to introduce carbon tax. And the Singapore government has taken a very decisive measures to make sure that the country actually can get to net zero by 2050. So part of that plan, there are various things, but part of the plan is to import renewable energy, because those of you who have been to Singapore will know that we are a very small country. So it's not possible for us, and we don't have wind, we don't have tidal, we don't have geothermal. So the only thing that we have is plenty of sunshine when it's not raining, but we don't have enough surface area. So that's where the neighboring countries come in, right? So Singapore government has been looking to import up to 4 gigawatts of renewable energy, but that has since been increased to almost 6 gigawatts. And for Keppel, we are involved in 2 importation projects. We've been given provisional license to import 300 megawatts from Indonesia and up to 1 gigawatt from Cambodia, Laos. At this present time, Keppel is I think we are the first to be importing low carbon hydropower from Laos through the ASEAN interconnector, through the ASEAN grid. So we are very much involved in this. And where I see there's a big difference is that because of the policies that we have adopted in Singapore, we are now importing it into Singapore, which means that if someone like Keppel signs to take or pay contract to import this renewable energy, it makes the project bankable. And with the rising carbon tax was $5 a ton in Singapore last year. Today is $25 a ton, and it will go to $80 a ton likely by 2030, and I believe it will go up higher. So what that means is that the value of the green electron in Singapore will get higher and higher. So as a result, I think this is one where I think through the government policies, the investment parameters for renewable energy makes a lot of sense. Now, one more point about government, and Lito, you might want to jump in on that. One of the challenges for investors when we look at these new areas is how consistent are those policies? Are the policies going to change over time? Because many of these projects have a very, you need to make money within the next 20, 25 years. And if the policy changes in between, or there are all sorts of, you can create, and we've seen many of that in Europe, in various places, where pricing of renewable energy may have changed, the subsidies from the grid may have changed. So these are things that investors would look at.
If I may, Greg, just following up on Chin Hua's comments, I would just echo his first comment, which is the opportunity is almost infinite, because the demand for energy transition, the demand for climate related energy is so much in comparison to the availability of capital, whether it's amongst MDBs like AIIB, the private capital markets, etc. So there will always be things to look at. The problem that Chin Hua, however, focuses on, and to me, focusing on the challenges, is that it doesn't it's not a blanket kind of opportunity because every country, every market, every segment of that market presents different kind of challenges. At the macro level, it's policy, and it's not only policy, but it's regulatory implementation. They might have the right policy, but when it gets to the Energy Regulatory Board, when it gets to at the level of the regulators, the implementation of those policies may be different, and there may be uneven treatment of locals versus foreign, this and that, right? So at the macro level, you've got policy challenges. At the ground level, there are several constraints. I mean, just speaking specifically, let's say about solar, and then talking about solar energy, say in the Philippines, it might appear that would be the best time to be doing it with cheap solar modules coming from China because of overcapacity and so on and so forth. The scarcity, believe it or not, is land, right? Because as you know, 1 megawatt of solar is 1 hectare of land. Land may be abundant, but it's the connection to the transmission line. So it's really it's looking at the whole system of electrification. It's not just building solar farms or wind farms or whatever. It's making sure that the transmission lines are sufficient. So you need to be invested in several parts of the energy sector, and that is a challenge in many cases. Chinua also talked about the carbon tax in Singapore, which presents an interesting demand that could be covered by, for example, accelerated conversion of fossil fuel power plants into green energy. The challenge, however, is that we don't have the modalities that would allow, for example, a coal plant producer today in the Philippines to monetize if he or she or the company was willing to accelerate mothballing a coal plant or converting it to an LNG plant or something else, because we just don't have the modality and the mechanisms to do that. And so you need a whole set of systems that would allow us to accelerate and really be able to realize those opportunities that exist on the ground. So many opportunities, but also many challenges.
I think two of you have touched on very well on the opportunities. It seems as opportunities are ample. In fact, liquidity probably is also ample, but I can see Chairman Ho want to give his comment from the policy and the regulation.
Basically, I agree that there's a lot of opportunities, but let's look at the reality check. If you do the reality check, the amount of money we need to invest for this climate action is around $3 or $4 trillion, depending on how you calculate. But the reality we have is we have around only 1.3 trillion, I guess. That's the figure we had last year. Why is that? Because simply, if you just employ the traditional financial analysis, the risk is simply too high. And that's why the government, as well as the MDBs, basically the public sector, should come with the de-risking measures, whether it's policies, whether it's guarantees, all kinds of stuff. Otherwise, it doesn't make sense, because wind energy, you are talking about 25 years. You don't know what's going to happen. And let me just, he made a very good point about this consistency, so I just want to share the Korean experience. If you remember, there was a Fukushima accident about 10 years ago. And that touched off a big controversy internationally about whether we should keep building up nuclear plant or walk away from the nuclear plant. But the real fact is that that accident did not happen from the nuclear, but actually it's from tsunami. That has never happened before, because that tsunami was so high that nobody actually planned it that high at that time. But anyway, at the time, Korean government at the time decided hastily to walk away from the nuclear plant and come up with a very over-ambitious goal for the renewable energy. And what happened is that basically it was a tragic failure. Our estimation is that this nuclear plant fiasco is cost around $4 billion, more than that. And over-ambitious goal for the renewable energy never realized. Actually, they are just trying to meet the numeric target without thinking about the big picture. So they just cut down the trees and come up with these solar panels. So numbers may look good, but in terms of the green transition, it was a disaster. And when you look at why it happened, of course now we reversed all those things, and that's why this government consistency is very important. But the reason why is because when they set up this master plan, they are driven by ideology rather than the fact, and they do not have a wide and deep consultation with the private sector. If the government have a long consultation with the private sector, all those things we should come up. But they just come up with a top-down approach without over the opposition of the private sector, and it costs us dearly. So when you set up this plan, it's very, very important to be consistent, and to be consistent, you gotta talk with the private sector, so the private sector voice can be reflected in your master plan.
Thank you. The three of you touch on a few very important points. All these assets are actually long-term assets. Therefore, it needs consistent policy. I want to ask Don probably to comment. What's your view from a multilateral or a large sovereign fund manager perspective?
Yes, this session is meant to be discuss what are the opportunities, challenges, but also how can we do about MDB's common theme, which is capital mobilization. So, like Gregory mentioned, it's just a huge gap. You see the statistics. Every year, several $1 trillion are needed for developing countries' infra asset class. Yeah, there's a huge amount of money out there, especially from a global institutional side. There's a huge gap. The question is how they're going to, close the gap, how they make these developing countries' asset class attractive. So we work very hard, and but still, because of all this, the sentiment and the last few years economic cycle, that sovereign fund, pension fund, insurance company, extremely risk averse, and it's a credit. Credit is just prevail. I mean, that's all the decision makers. So we are under huge pressure, not just AIIB, but also IFC and all other. You'll see the whenever we have a board meeting, and the private. How can we bring private capital into this channeling this to the. So that's why we came up with several instrument. I think that's area maybe I can share with you. Then what can be coming in the future? Of course, this is just scratching the surface. It's not, but somebody has to start doing something to show the world how it works. So it has to make this, attract enough to attract more capital. So, but we also have to be realistic. How we're going to bring this additional capital? So I'm very pleased to share with you our experience in the past few years, especially the AIIB side. We started kind of investable recycling, bring additional capital by investing in India's InvIT. Actually, that was a very interesting. It's like a REITs, the investment trust, which is listed. So basically, what it does is not greenfield, but the operating assets. So like a toll road in India, for example, and solar farm already finished the construction. So the risk is very low. It starts producing yield, very stable tariffs and all that. But the investor wants to get out. Otherwise, they have to stock for next 20, 30 years. So we like to buy the asset, and investor will get that money, and we assume that we'll use another. This is one of the category of capital mobilization. So I think this is a very wonderful idea, and the India government is very supportive. It's a semi-regulated. So those are the one case. In fact, Najib, DG Najib and Gregory, we all were same subject, and we did several transactions. I'm just give you some example. Doesn't mean we did good job, but I think it'll be show some kind of example, especially for other MDB. And of course, we are working very closely with the KPL. They have a wonderful project as a flagship fund and data center fund. Private equity, by definition, will bring more capital because we come in and we place all the safeguard of MDB standard, so that will make other investors feel very comfortable. And another typical example is actually recycling bank loan, right? Bank loan, which is infrastructure loan, which corporate loan or project loan. So we work very closely with the Singaporean government is very, on the balance, try to be the center of the capital mobilization center in Singapore. So the Clifford Capital is one of the examples. It's well known. It's on our website anyway. The same subsidiary like Temasek. Everybody is Temasek. Like you too. Anyway, it's not exactly your competitor, right? Okay, good. So the entity called Bayfront, so what it does is, I'm sure you know the CRO, right? CRO means we buy so AIIB put the first loss, which is actually the equity portion, then we buy the bank loan in the global bank or regional bank, commercial bank, the existing bank loan. So we buy them and bundle up, and actually the packaging. So the action we buy from the bank, commercial bank, that will free up the room for them to go out for the other additional, infrastructure loan, which is great. That's another capital mobilization. So we bundle up, and then the structure and the different tranches and different from AAA, AA. So that will make other investors easy to access, comfortable access, because of the high grade of the credit. So again, we all spend a lot of time for that, and then recently, especially DG Najib's effort, and we also work with the HKMC. HKMC is a newly created entity on the HKMA. So they also did a similar thing of CRO. So we invest in the first tranche of the junior tranche, but at the same time, we also purchase as a bond investor of this CRO, actually after with a very nice credit, not just one credit, but we get a mixture of several credit tranche. And I'd like to show you the latest move and direction, which is very interesting, to be honest with you. Not all of a sudden, the very wealthy endowment, I cannot name, but you will know who they are. They really have a very positive and strong mission to help and make a positive impact on climate change and the green infrastructure type of thing. So they are willing to put up their own endowment money as a concessioner, which means that absolutely okay, they could lose, providing some protection for the investment, either loan and equities, to take the first tranche, first loss. And there's several examples with the IFC. It's already launched. AIIB is not to be meant to be. We are providing concessional financing ever. We are taking the market risk. But because of this, the latest move, now the team, our project team, is now working with them to come up with a certain structure, can provide a certain protection. So that is wonderful. I think is a way of doing things. Myself, I was KIC. I would be very attracted to see that this kind of developing countries' infrastructure asset class, but with some kind of protection. Like first loss, second loss. That'll be, I think, very interesting. Of course, it's very arguable because we have to protect our capital from our member countries, but at the same time, we have to make some impact. So actually, providing our own balance sheet, certain amount, of course, is a risk return based. The analysis is critical. So now we are working on that. So let's see how it goes. Hopefully, something comes out in the near future. So I don't know what else we could do, but every time we see any new instrument, some more creative instrument, to attract more capital, to make this private capital mobilization come into play. So thank you for this kind of sharing, and we need a lot of support and interest, and we are very committed, and we will do our best on this subject. Thank you.
Greg, if you may allow me just to react to Dong's point, because I think Dong has narrated a lot of all the good stuff that the bank has done, with regards to financing, creating funds, and so on and so forth. But I just want to go back to one of the challenges that we actually talked about, which is policy. Policy consistency, specific policy that will promote mobilization of private capital, specific policy that will promote electric mobility, and so on and so forth. I don't know how many of you are aware, but the bank has decided that instead of just being purely a project financing institution, it will now be providing policy loans to countries to be able to encourage and advocate for certain reforms in policies. And I think this could be an opportunity that the bank, and I would challenge the AIIB to use that power and that tool effectively, because I think amongst the gentlemen here on the stage, I'm sure we can come out with so many policy recommendations, right? That the bank can then advocate to the different countries. They can look at best practices. I mean, take something as simple in terms of mobilizing private capital. The concept of business trust. I mean, and I know Keppel has such, infrastructure trust itself. Singapore has a business trust legal framework that would allow for the securitization of infrastructure assets and allow it to go into the equity market, the stock market, as investment trust. Thailand has the same, similar concept with infrastructure funds. The AIIB can certainly promote a concept like this legal framework, and take it to many different economies so that private capital can be mobilized more easily, more smoothly in some of these other markets. There are many good practices, incentives, tax incentives on electric mobility, right? Some countries do it, not many countries, some others don't. Why can't AIIB promote and provide that kind of policy loans to some of these economies that are not yet, doing best practice to promote mobilization, not just mobilization of private capital, but just promoting green energy, promoting energy transition. Monetizing this carbon credit that I was talking about, when you mothball a coal and convert it to something else, why can't the AIIB help and provide knowledge to some of these countries to allow it to accelerate and get a lot of these projects done more quickly? So again, Dong, I appreciate all the good things that the AIIB has done, but it can do a lot more, especially with this new tool that it has decided to use.
Can I just add 2 points
Please,
quickly?
please.
Right. I'll be quick. I'll be quick about it. I think to what Lito have said. Keppel owns a lot of infrastructure assets, but it's held under our Keppel Infrastructure Trust. As a LISCO CEO, I cannot afford to own infrastructure assets because they have too much depreciation. That's the fact of life. But if you put it into the business trust, the shareholders in the business trust are looking more at the dividends. So they are not so concerned about the profits, right? So 1 point. Second quick point, what I think we briefly mentioned is that, some of these ideas about, energy transition, retiring coal-fired power plants early, this requires what we call pathfinder projects. And Keppel have actually been recently involved in South Luzon in the Philippines with a coal-fired power plant that was going to be retired in 2040. We brought it forward to 2030 on the basis that it will be converted into it could be a methanol plant of some sort, but it will be a green energy from coal. There was some concessionary financing from Multilat, and which I suppose, to your point, AIIB could also take a more active stance in that. And then there was also Gen Zero, which is a Temasek company that's actively developing the modalities of credit for transition credits. And the idea would be that this transition credit would potentially be sold in Singapore.
I just want to jump in and say, when I hear all these different instruments and different initiatives, it's very optimistic. But at the same time, I talk about this policy inconsistency within following this different government. But another reality is that even in the same time, in the same government, not because we are not committed to the goal of the climate action, but there are other policy priorities. They can create some inconsistency inevitably because, for example, IMF came up with something called climate goal trilemma, meaning that there are three goals: climate goal, and there's data sustainability, and there's a political feasibility. Among these three different goals, you can achieve two of them at the same time, but you cannot achieve all the three at the same time. Meaning that, for example, we all think green energy, renewable is better. So everybody's moving in that direction. But then there's a war erupted in Ukraine, and energy security is becoming much more important. Whether it's coal or not, it's important in the long term. But right now, we need energy security, that kind of conflict of goals. In Korea, for example, we have all this period of high inflation and high interest rate. And then there's a big pressure from the political parties, particularly before the election, that to provide some fuel subsidy from importing gasolines and diesel. At the same time, to keep the electricity tariff low. And because of the political pressure, we did that. But this fuel subsidy is given at a temporary basis, but then it's extended again and again, even though it's a smaller scale. Electricity price, we all know how it should be done. You give a voucher to the low-income family, but the reality before the election is such that we have to keep it very low. I mean, the government decided that way. That's the reality. And what happened is that it might give some breathing room for many electricity consumers, but the problem was that our investment in the transmission line was insufficient because of the low electricity price. And what happened is that many renewable projects cannot connect to this transmission line because the line is already saturated, the existing line. So it costs a lot in other areas. So what we are saying now, discussing among us, is that let's come up with a new structure. For example, instead of government setting up the electricity price, why don't you give it to the independent panel? Just like we have a central bank independent of the government decision, so that electricity price will be decided not by the immediate concerns, but rather by long-term, more rational basis. So the point I'm trying to make is that unless we can make progress in other areas like data sustainability or energy security, we cannot achieve this climate action in the void. All other goals are also very important goals. What we're trying to do is minimize the conflict among those things, but that's exactly what's happening on the ground. And that's one of the reasons that, international fuel subsidy is like 6 times higher than the investment in all this energy transition. It's like 8.6 trillion per year. And that's the reality, so that we have to realize that while all these instruments and the commitment to the climate goal is worthy, and that's the direction we should go, but at the same time, we should make progress in other areas. Otherwise, our goal will be always far away.
In fact, having heard your discussion, I thought maybe we should try to ask, in terms of a policy, would there be a silver bullet, or we have to consider different size of economy, different type of a market. For example, don't touch on AIIB's investment in INVIT as a capital market product in India, but that's a very large economy, local currency driven. And AIIB's role there is to help do the market making at the beginning, but gradually, when it's already very developed, the value addition would become less and less. Chinhua touched on the ASEAN, and I think, Lito, you also live in ASEAN. I can see the trend of ASEAN become more and more integrated. That's why my curiosity here is, when you put your policy hats on, how do you address this different situation? Another issue touched by Chairman Ho is, yes, we can build up large capacity of renewable energy to help the transition, but if the grid and the transmission system is not robust enough, then this could become stranded assets in long run. So with all these ingredients on the table, I would actually ask you maybe put your policy hat on and then to see what's the risk distribution between private and public side, because PPP is always easy to talk but difficult to implement. So who want to take these?
You know, private sector guys like me, whenever I get a chance to tell the policy makers what they should do, we have a lot of ideas, right? I think you touch on, Gregory, you touch on a very important challenge, right? Because there is no there's no one size fit all. There's no silver bullet per se, right? So, for instance, you know, we are, you know, as a private sector guy, right? The way I think about it is, we are planting a hydrogen-ready power plant in Singapore, 600 megawatts. The cost is about 550, 600 million US. But once I plant it, I will have to pay for the feedstock, and hydrogen is quite expensive now. So at some point, it will make sense to introduce hydrogen. You can run 30% hydrogen without any alteration. With alteration, it can run 100% hydrogen. But that can only happen when green hydrogen price comes down. The 300 megawatts that I'm going to create, you know, import from Indonesia, megawatt of renewable energy, it will require 2.1 gigawatts of solar farm. And you work out the sums, it's about 4 to 5 billion US, right? So you see the factor is so different in terms of the capex. But of course, once you invest in the solar plant, theoretically, the feedstock is free because it's from the sun. But it creates different kind of economics, and we've seen that happen in Europe. So I think policymakers need to think through all these. As what you said, it is not in isolation. They got to think about the whole problem as a system problem, an ecosystem problem. But unfortunately, it's difficult because you are dealing with not just one country, you are dealing with many countries. Another area which I'm not involved in, but it's an area that we potentially, you know, we used to have a marine business. If you look at the marine side, it is one of the hard to abate sector. And one of the challenge there on the marine side is that no one has agreed whether it is going to be ammonia, methanol, you know, or continue to use liquid hydrogen, LNG, to run the vessel. So as a result, you know, if you are the ship owner, you got to think, so what do I build? You know, what do I have for fuel, right? What type of ships do I build? And then you have to think about, as you said, you don't want to have a stranded asset, right? Then the people that you have to provide the infrastructure globally to supply the fuel. And again, no one wants to have a stranded asset. So the point is that these are actually very difficult challenges, and if you start to think of it in a very isolated instance, you are never ever going to solve the problem. Okay, maybe I stop here, let the policy.
On the policy side, and then putting on my previous hat, having been Secretary of Energy and Secretary of Finance in the Philippines, and in fact, when I was Secretary of Energy, I helped write the law that privatized power in the Philippines, which used to be a government monopoly. It is what has allowed private power generators to invest, whether foreign and local and so on, created one of the biggest flow of FDIs in the Philippines. I have to say, number one, there's obviously not one solution that fits every economy, every market. So every economy is different. We're all dealing with different politics. We're all dealing with different challenges. I am reminded when I was Secretary of Energy, something that I had didn't connect to or didn't resonate to me until the President reminded me. And what the President told me at the time when there was a crisis and oil prices were going up, he told me, Lito, energy price, whether it's electricity price or price in the gasoline station, is the most political of all issues. Government can fall on the issue of energy price. So that was a primary concern. Chairman Hurt talked about the different things that you have to balance if you're a policymaker, either running the energy ministry or running the finance ministry. And we had to put all of that into its proper context to come up with the right policy. In the case of the Philippines, it led to the full privatization of the power industry in the Philippines, because that's what we can do, because the government had no resources to support any further growth of capacity in the power industry. But I think there is value to looking at best practices for any government. Because we're faced with different challenges, but there are certainly solutions that have been found in other economies. That's where the AIIB can also be a custodian of knowledge that it can pass along to different economies faced with different challenges. Whether it's how to promote solar, how to promote electric vehicles, how to deal with the transmission problem because we suffer from that in the Philippines too. We privatized transmission, and now the government has no capability to mandate the operator to build more transmission capacity that would have allowed solar farms to flourish in many different regions in the country. So a law that we passed in 2001 has been unchanged since then, and it's probably looking for amendments. And even I, who authored part of that law, would now say that yes, we need to amend that to confront with the challenges that the country is facing today in the energy sector. And that's where, again, your policy reform loans can motivate or incentivize the government to come up with new policies to face with the realities that we're facing today: poor transmission, lack of land, tax incentives on certain equipment that is necessary, mobilizing private capital. You mentioned about, you hinted at something that's so critical that we've talked about in so many AIIB meetings but never found a solution. It's a mismatch of foreign currency risk, right? I mean, all infrastructure generate local currency. Loans that we're talking about, financing that we're talking about from PEs, from strategics, from sovereign wealth funds, from MDBs are all in foreign currency. That doesn't help by itself. I mean, we need to find modalities that would allow us to convert them into local currency or take away some of the foreign exchange risks that are embedded in a lot of this infrastructure. So there's just so much to do. But again, best practices and making sure that knowledge is available to many of these economies would be very helpful.
I point out one area perhaps we can make more progress internationally in terms of the policy. We used to have this global carbon credits, but now it's moved to, because of the Paris Agreement, to so-called ITMO. So whenever you have this NDC achievement, and then you can use some of those NDC achievement in other countries for your own account for UNDC because Korea is not well equipped with the renewable energy sources. There are many private capital, private and public capital to go overseas to help these countries to achieve their NDC goal and count it as Korea's own. We are talking with Mongolia, Vietnam, Indonesia, many countries, but the problem we have is that so far, even though they agreed on the big concept of ITMO, there is still lack of very slow progress in terms of the setting up the detailed rules. So without that, our capital is there trying to help them, but basically it's hung there until we made a further progress in the international area, whether it's COP29 this year. So as soon as we make further progress in those international agreements, it can free up many capitals. That's one point. And another point the Korean government is trying to do is Korean trade insurance company came up with the insurance that covered this risk. Okay, right now ITMO is still hanging, in the air. But if you make an investment to that purpose, and later somehow the international agreement or change of the mind of the recipient government do not count it, still we can cover their risk. So we try to promote as much as possible. Even though the progress in international is slow, we try to push and encourage the private sector to move overseas to come up with that kind of project.
Thank you. You all share very good points. Don, as a representative of AIIB, as Alito said, AIIB should be challenged, but I would say we should also challenge ourselves. Any thoughts after hearing these comments from the panel?
First of all, I'm not the representative of AIIB. We work together. In fact, we have an international advisory panel member. This session composed of challenges and energy transition, capital mobilization. So those separate issue, but it could be connected too. But when Greg mentioned there's some challenges, we have a big challenge today. But the thing is, when AIIB established and as like other MDB, we have a very clear rule and principles and policies, green energy and renewable energies, and absolutely, and we are complying all this Paris Agreement and all the discussion COP28, G20, all these global issues and climate change, that's absolutely, we are still absolutely in line with. We have to comply, and because we are composed of all the countries' public sector representatives. The point I'm trying to make is the energy transition. What is the energy transition? The thing like Rito said, we realize this cannot be just clear-cut, pure immune policy. And my point is it has to be deal with the geopolitical issue. So that issue comes into play, and that makes a very difficult situation sometimes how we're going to balance out. The thing I'm mentioning is, for example, we have a screening committee for all the projects we received. For example, coal, absolutely no way. Even transportation project carrying coal, no. Anything very strictly banned. Fossil fuel ones. So for our the steps, they are extremely aware. Whether even this project can be brought to the board or even the screen side. But we did some project, let's say gas-powered plant, like in Bangladesh, for example. Then case by case, we look at what is the really is better than coal, and what is the really impact in the remote area type of thing. So my point is, but on the top of that, we are now having, as you know, what's happening in Europe and what's happening the global politics. So we got into some kind of conflict of situation. Some board members changed their stance. So that doesn't mean we're gonna move back to coal or fossil fuel. But that is probably the challenges down the road. Whether even we keep saying we are the climate change, we are the absolutely comply all this green energy, renewables. But we have to still cope with this kind of delicate the political geopolitical situation. I think that will be a very big challenge for the MDB as well. Not just us, but all other MDBs.
Thank you. I think what the reflection I have before I open the floor to the audience is it looks like we all have to stay very agile, because it looks like the consensus, nobody wants to create stranded asset. But we also recognize policy can be different depending on the country or region. So it should be fit for purpose. On that, and also on Lito's alluded, we have a policy-based policy-based loan, climate policy-based loan. So AIIB should actually mingle the public side and the private side more closely, so that we don't make public the enemy of private, try to let others put the weight only. So to add to Lito's point, I also want to highlight this bank has been a project-focused bank, but gradually we realized to do the private capital mobilization, we should also step up on the syndication capacity. We should also step up on the funds and funds-related investment, and also FI. So in a nutshell, we need to offer different product to serve different stakeholders so that we can move to the energy transition collectively. But I don't want to stay between you and your reboot of energy, but I still want to open the floor to see if any audience have any questions for this lovely panel. Oh, yes.
Hi, it's Kleber from Edmonton, Alberta, coming from Emulations, a digital consulting company out there. My question is actually directed to Dong, just because you brought up the note about CLOs, and it really caught my attention because of the Federal Reserve dropping interest rates and just its attractiveness due to its yields, and also even just like the reinsurance market as well. But my main question is, what role can SRT's significant risk transfer transactions play in mobilizing private capital in climate and energy transition?
Again, as I said, the energy transition and this kind of recycling zero could be separate subject, but it's also intermingled. Because when you buy bank loan, it has an old loan, old asset, which is a lot of fossil assets, but we understand that is inevitable to make it some kind of standard product to free up the capital. So now from that time they can do some more clean renewables. But when you say this, how we going to transfer the risk is pretty much any other investment banker's product, like a CRO. What we do is actually buy all these old assets. It's the same to the HKMMC. We bundle up and structure, and there's different tranches and different credit. And incredibly, we even have rating agencies rated at AAA, something piece, and AA. So you can pick and choose and make a one bundle. So I think it's a very wonderful, interesting product. Of course, the junior tranche and even equity, we are taking those. So we have to also very be careful how we going to balance our risk and return. But we are not like other MDBs, other sovereign fund. They normally focus on return and risk return, but we have some mandate to some, the thing we have to carry out. So that's why we are willing to take those kind of risk. Did I answer the question?
Thereabouts. I'm just saying, like, what role do you see significant risk transfers playing in just mobilizing capital, right? Because, we sit here and there's oh, sorry. Yeah. As I'm saying, like, what role can SRTs, you're familiar with significant risk transactions, right? Like, I've seen, like, the IFC done certain deals with, what's it called, Paribas Bank, right? So I'm just saying, like, is AIIB going to, move forward with more certain deals of that sort, like what IFC has kind of done itself? Yeah.
Well, you mentioned the CLO. I explained that, and the risk transfer or risk enhancement, the credit enhancement product as well. So we adopted starting the guarantee. So we now have a guarantee product, not only for typical project finance or even bank loan, but also even trade finance. So, we did a couple deals in Bangladesh, for example. So, again, I didn't mention, of course, Gregory will be the actual main body who will carry out this project. But we are very happy. We are pleased to say, we started 3 years ago of risk transfer. We work very closely with the insurance company. So that's another fantastic, I think, the product to bring more additional capital, first to say.
Maybe I just quickly touch on that. For the CLO, is not mainly focusing on SRL. It's mainly to alleviate the balance sheet pressure to commercial lenders so that they can free up some capacity to be redirected into the greener investment. All these major banks have a green target these days. So this is something I just want to clarify rather than the SRL. On the SRL, we have other product. Thank you.
Well, first of all, I think all the esteemed panelists, I think all your commentary was absolutely great to hear. My question, and maybe all of you can answer that if you have the inclination, is if you're going to mobilize private capital, and you talked about the challenges, everybody talked about the challenges, I would convert that into due diligence. And so Lito, for example, you're involved in this RISE fund, the TPG RISE fund, and Sir, you at Keppel also do investments and long-term power purchase agreements. So what are the risk factors that investors should be taking into account before they invest in climate and energy transition investments?
I think first and foremost is the policy environment. Is it consistent? Is it predictable? Has a country shown the ability to sustain, policies as opposed to changing it every crisis they face? But more than the policy, I think it's the regulatory implementation of those policies, because you could have regulatory captures, in some of these economies, and one has to be very careful, especially in emerging markets where the application of policies is not always even. And I think investors should be mindful of that. I think investors should also be mindful of local, and I'm talking about trying to combine capital, which is provided by, say, the foreign investor, with local knowledge, maybe working with the local partner, but also expertise in the particular technology that we're talking about. Thankfully today, and I just to land at a positive, optimistic view, I think many investors now, Keppel being one of them, but I include many other infrastructure funds that have been created and are growing very quickly, have now developed their own expertise that allow them to be much more, I guess, sharper in their due diligence, particularly with the technologies, with questions about right of way, questions about transmission lines, connectivity to transmission lines and so on. I think having the hybrid of what used to be just financial investors as opposed to a hybrid between strategic investors and financial investors. And you now have people like Keppel, who's both, right? I mean, they're financial investors and they do take third-party money like TPG, but they've also developed the technical expertise to be able to look at projects and dissect them and do a proper due diligence.
So maybe just to add to what Lito has said, I think he's right. I think at the end, we find that a lot of these projects actually take quite a number of years, to study and to basically reach FID or final investment decision. You need to clear regulatory approvals. You need, if it's a renewable project, as you say, connection to the grid, get all the approvals, environmental impact studies, etc., etc. So I think at Keppel, what we have is that we have a balance sheet behind us. So a lot of these projects in the early days, we will actually de-risk it on our balance sheet. And then when you reach a point where we need, when we reach final investment decision, that's when a lot of capital needs to come in. And that's where we would then bring a fund in to invest. It's win-win because from the fund's perspective, working with someone like Keppel, we can actually de-risk it for them in the early stage. And we put these assets in at cost, holding costs, so we don't charge a premium, with the belief that at the end of the day, when the asset does well in our funds, there is a carry, which we will earn. So we earn it on the back end, so that our interest is aligned with the LPs.
The time left, but I like to share with you one interesting aspect because AIIB has ESG aligned fixed income bond portfolio, which we found it very attractive, especially the institution like you. Let me tell you this: we composed 50 issuers of dollar denominated dollar issuers from the region, infrastructure assets. Then average credit, the rating is like a BB, right? So, but can you imagine this? For example, Indonesia, Philippines, or even Thailand, India, for example. How many big companies can issue, or SOEs, dollar-denominated bond and the ratings? And they're very good companies, very solid companies, but because of their own country's credit, it was penalized. So can you imagine if you bundle, let's say 50 or 10, 100, it's a very diversified and risk low, and if you bring that the same credit, the portfolio into US dollar, it's we call junk bond, right? But you cannot compare this quality of this, the Asia's very big, solid, the infra companies' issuance in dollars. I say there's arbitrage. I mean, as a pure investor, if you can think of that. So I think that's why we work with one global asset manager to compose one separate account. We like to show how it works. Hopefully that will attract. So my point is in terms of the taking risk is extremely important, especially a global investor. But they have to go through a little bit deeper. If you stick to this kind of a selective asset, which is US dollar based, how many, can do that? Not even in local currency terms. So I think that would be very attractive asset class. You should, I think of, just not looking at just credit, credit ratings. Just adding one more.
Thank you. I see no hands, and on that note, I would conclude. I think this is a very great discussion. The last session of the day, and we have a very low leakage ratio of this grade here. So that gave me full confidence. we can work together on energy transition and climate finance, and we should do the fit for purpose policy making, and also make disciplined investment, not to create stranded assets when we jump into the new era. Thank all of you, and I wish you a very good evening. Thank you.